His outlook on the economy and to preview Ben Bernanke's testimony on Capitol Hill is Nouriel Roubini. He's a former Treasury and economic advisor under the Clinton administration. He's now chairman of Roubini Global Economics and professor of economics at NYU's Stern School of Business. Good morning.
Good morning.
Jim Rogers just speaking, and he's saying that we're going to see one of the worst recessions we've seen in some time, that the central bank, the Fed, the Treasury, all making mistakes in terms of how they're handling things. What do you think?
I agree with him. This is going to be the worst U.S. recession in decades, and this is also the worst U.S. financial crisis since the Great Depression. This is really severe. We'll have a systemic financial and banking crisis.
So, wait, so it feels pretty bad right now. How much worse can it get? I mean, what is the worst-case scenario here in your view?
In my view, things are going to get worse in financial markets. We have Fannie and Freddie that are insolvent. We have hundreds of smaller banks that are insolvent. We have major regional banks that are bankrupt. Even some of the national major banks are insolvent. A year from now or 2 years from now, maybe there is not going to be any major independent broker-dealer. This is a systemic financial crisis, and there is no end to it. The home prices are falling. The housing recession is getting worse. It's spreading to the entire economy. And it's a vicious circle between a contracting economy and greater credit and financial losses feeding on the economy.
You know, everybody's been working overtime. It certainly seems that way. You know, the Fed, the Treasury Department, Hank Paulson, you know, trying to figure out how to kind of shore up the financials. Is there something that they could do to prevent that from happening?
At this point, you cannot prevent a recession. You cannot prevent a severe financial crisis.
But what about shoring up some of those financials? I know we talk moral hazard, and let's put that aside for a moment, but is there something more that can be done to prevent it from going even, you know, worse from here?
No, many banks are going to go belly up, and FDIC is going to even run out of money, so we'll have to recapitalize the FDIC. You know, they already lost 10% of the money they have just to solve the problems of IndyMax.
Okay.
So we have a severe financial problem. At this point, these are credit problems. They're not problems of liquidity. There's a system of insolvency in the economy. Homeowners, mortgage lenders, financial institutions, home builders, even corporate firms.
And there's no reversing the trend at this point?
No, at this point, it's going to get worse. So we have a severe recession. Eventually, we're going to get out of it through easing money, fiscal policy, and a big bailout.
So lucky for Mr. Ben Bernanke to be up on Capitol Hill today giving a semi-annual testimony. What kind of questions do you think lawmakers will be asking? Should they be asking at this point?
Well, yeah, when the thinking is going to talk about growth and inflation, is worries about upside risk to inflation, like last month. But the reality of it is now what's happening with the banking system, and Freddie and Fannie is overshadowing completely anything else. This testimony is going to be shorter because we're going to have a separate hearing on financial markets.
Right.
At this point, all the questions are going to be about Fannie, Freddie, and the banks, and it's a risk to financial meltdown.
Jimmy Rogers, we had on yesterday, and certainly saying that the government, you know, is making a mistake in terms of its plans for Fannie and Freddie. Do you agree, or did the government have no choice here?
I agree with him. I think this bailout of Wall Street, of the rich and the well-connected, is not right. You have to first wipe out the shareholders. You have to get rid of the managers.
But what would happen if we didn't bail them out? What would happen then?
No, I mean, even if you want to bail them out and put public money, the first thing you do, you wipe out the shareholders. These are insolvent. So if you're going to put public capital, shareholders should be gone. You replace management that was corrupt and inefficient. And even the bondholders should take a haircut. Why should the U.S. taxpayer pay for the cost of this insolvency? So the plan is a plan that essentially bails out management, shareholders, and bondholders. It's not correct. It's not going to even work.
Something I talked to Jim about yesterday. I mean, if it was another industry, would we be seeing this bailout?
Of course not. Of course not. I mean, there's been a systemic moral hazard in financial markets. This is just privatizing the gains and socializing the losses. At this point, this is just reckless. This is not the right plan.
All right, sit tight, Nouriel. We're going to take a break, though, and come back and talk some more, because I do want to get your thoughts in terms of the inflation, what the Fed can do in terms of, would you be doing something differently if you were back at Treasury?
Yes, I wouldn't bail out essentially the shareholders, the management, and the bondholders of Fannie and Freddie. This is really a wasteful use of taxpayers' money. You have to wipe out management, the shareholders, and even the bondholders should not be made whole. They should take a haircut. So that's the right solution.
All right, so this is what you think is going to be talked about mostly on Capitol Hill today with Ben Bernanke. You've also got a second panel. What do you've got? The recent market developments and regulatory responses to them with Ben Bernanke, Paulson, and also Chris Cox over at the SEC. So again, they're going to be talking about this, right? Yeah,
they're shortening actually the time given to the Bernanke testimony and the economy. They're going to concentrate most of the day on financial markets.
Are we making a mistake? Is that a mistake, though? You know, we're watching inflation levels and so on and so forth. We talk about commodities every day and the run-up that we're seeing. I mean, are we worried about?
No, I mean, in my view, inflation is going to be the last of the problems of the Fed for the last year. Yeah, because we have downside risk to growth. We're going to be severe financial crisis. You're going to have a slack in labor markets, going to control wage and labor costs. You're going to have a slack in goods market, controlling the pricing behavior.
Cutting its forecast
and even oil prices are going to fall sharply. So inflation is going to fall. It's going to be the last thing thing that the Fed has to worry about. It's going to be growth, severe recession, and severe financial crisis.
Those
are the things that Bernanke should be worrying about.
If you had one question only that you could ask Ben Bernanke today, Hank Paulson, Chris Cox, what would it be?
It will be, what are you going to do to resolve the worst financial crisis in the U.S. since the Great Depression? Bernanke is a student of the Great Depression. He knows it inside out. So what is he going to do? This is the worst financial crisis. They should recognize it and should figure out what they're going to do about it.
All right. So if you were an investor, what would you do? I mean, I'm hearing more and more people say put it in cash.
Absolutely. The stock market has corrected only 20%. I think it's going to fall another 20% this year alone. In the typical U.S. recession, the fall in equity prices around 30%. This time is a worse recession. Equity prices are going to go further down and sharply.
We've had a couple of other crises, the S&L crisis, we had the telecom fallout, and so on and so forth. How do these compare in comparison?
This is much worse. The S&L was a bunch of thrifts in the south of the U.S.
Right.
It's a systemic financial crisis for the entire United States. And the telecom problems are, again, 5% of the economy. This is much more severe, much more deep, much more protracted. We haven't seen a recession like this and a severe financial crisis like this since the Great Depression.
All right, so there'll be some interesting questions for Mr. Bernanke and company today. All right. Nouriel, thank you so much.
Pleasure being